Today, Wall Street will try to close out the week on another all-time high after going on a record ride. Yesterday, the S&P 500 closed at its highest level since 2007, and the Dow improved on its own new record. Here's a look at the numbers. The Dow was up 52 to close at 14,578. The S&P gained more than 6 points, closing at 1,569. Both are records. Joining us this morning is Adam Schell, markets reporter for USA Today. Thanks for joining us, Adam.
Good morning.
Okay, so not too long ago, we're celebrating the Dow. We can't believe it. Record-breaking times, the best first quarter in 15 years. Everything that was lost in the recession is back again, and now the S&P breaks a record. What's going on? Why are things so good?
It's just it's a great comeback story for America. You know, 4 years ago, it looked like the end of the world. So this is really a story of resilience. I mean, the economy's bounced back, the stock market's bounced back. That's leading to increased confidence, and a big reason why the market has been going up has a lot to do with the lack of alternatives. For example, the Federal Reserve has put together this 0% easy money policy.
Right.
So if you're an investor and you want to save for college, you want to save for retirement, at some point you realize that 0% isn't going to get you where you need to be. Mm-hmm. So as a result, investors are being forced, especially professional investors, to put their money to work in assets like stocks that have a greater potential to grow their money.
Right.
And a lot of the move has been really driven by just the better economic data that we've seen this year, and especially in the last month, things have been creeping up nicely in terms of the data.
You use the word creeping, though, and I think that's one of the issues that just regular folks can't really understand. Here, Wall Street's just fantastic, but the unemployment rate is a little bit better. It doesn't feel a whole lot better just for regular people.
Right. I mean, there's definitely a disconnect between the stock market and the economy and some of the difficulties a lot of Americans are going through. As you pointed out, the job situation is still tenuous. There's still people out of work. But I think the disconnect, the reason that the market is going up despite what looks like times not being so good, are a couple of reasons. Number one, strong profitability from U.S. companies. They continue to churn out profits, largely in large part because years ago, when the financial crisis hit, it forced them to kind of tighten their belts. They cut costs, and now the profits are starting to hit the bottom line. And then you have the 0% issue that we discussed, and then just the general sense that investors are always looking forward. And right now, what are they doing? They're betting on a better future, and as a result, stocks are starting to improve in terms of the outlook.
So, is this real, or are we going to see a correction? Like, how long can this go on?
Well, I mean, corrections are actually historically very common. They typically happen maybe every year and a half. This particular rally we've gone, I think, roughly 500 or more days without a correction is really a 10% drop from a high. And we haven't had one, and it's really like 500 days. It really ranks in the top 10. It's like really the 10th longest period we've gone without the market diving,
right,
which is good, because what happens when the market dives? People get scared.
Yeah.
Oh, I want to get out, instead of holding on, etc.
So I'm not an investor in stocks. I don't really watch, the stock market, but I have a 401k like a lot of people. Should I be checking my 401k and giving it a standing ovation, or should I just not even look, don't even consider it, because markets go up and down?
Right.
Regular person
I
advice.
think this quarter is when you will want to open your statement. So in the next couple of weeks, when your statements come, people are going to be pleasantly surprised, because most of the market was up 10% in this quarter. So whatever balance you have would have grown by 10%. If you had 100,000, now it's 110. If you had 50, it's now 55. So I think people will feel better about that, and they may think, hey, maybe the stock market's not as scary as a place as I thought it was a couple of years ago, which is probably a good thing.
Yeah, I think a few years ago people got really scared, so it's nice to have some pleasant news. Adam Schell, markets reporter for USA Today. Thanks for joining us this morning.
Thank you very much.